Welcome back to another lesson. We continue with our revision series, and in this video we are looking at an exam that was done in November 2023, that is Rchrp 03, Accounting and Financial Management. Now our focus is on question number 6. As you can see, I've displayed it there. Question number 6A reads, examine 5 factors that influence the cost of capital. You see, when you're talking about the cost of capital, you're referring to the expected rate of return for each and every source of capital. Now, the first major factor that influences the cost of capital is the interest rates. Interest rates. Where the interest rates are high, the cost of repayment is also high. That means where you borrow funds at higher interest rates, it means the expected rate of return for that loan is also very high. So in this case, we are saying that contributes to. The next is what we call credit rating. So the ability to borrow depends on the entity credit rating. That means an entity will be limited on the amount of funds they can acquire based on their credit rating. Another factor is inflation rate, where there exists high inflation rate, the cost of capital rises. We also have the nature of the industry, where uncertainty exists on future cash flows, limits the amount to borrow, and the cost of the amount to borrow, and the cost of the loan increases, and the cost of a loan is high. Finally, we can talk of the market conditions. In a boom season and recession, the cost of capital varies. So basically, those are factors that influence the cost of capital. At B, you are told that the cash book and cash statement of XYZ consultants reveal the following balances as that 1st December 2020. Cash book balances were that 6,800, bank statement were 107,000. The following discrepancies were revealed. That is, we have unpresented check, uncredited checks. Checks of 55,100 was recorded in the cash book as 51,500. A standing order of 70,000 was not recorded in the cash book. A supplier paid 8,500 to the bank, and this amount was not recorded in the cash book. The following amount the banks were not recorded in the cash book: bank charges and overdraft interest. Prepare the adjusted cash book. Now, when you want to prepare a cash book, it can be in two formats. The first format is the T format. XYZ consultant. XYZ consultant. Adjusted cash book. Adjusted cash book. Now, here we need to recognize the fact that cash book has a debit and a credit. Now, balance brought down. This is 96,800. It's on the debit side. Balance brought down 96,800. If it was recorded as negative, it would have gone on the credit side, but this one is on the debit side. Now, let's look at items that affect our cash book. 1. Unpresented checks were 74,200. Now, what are unpresented checks? These are checks that are due for payment. You have issued this check for payment, but they have not been presented to bank. And they have not been presented to bank. It therefore means they only affect the bank statement. From your side, cash book were well recorded. Uncredited checks. These are checks that you are supposed to receive money from, but the bank has not credited to your account. So those are information that affects the bank statement. Yeah, because this is the information you already know, but the bank has not implemented. A check of 55,100 was recorded in the cash book as 51,500. So that means there was an error. This money was supposed to increase our bank balance. So error here we have how much? This is, you are supposed to record as 55,100, but it was recorded as 51,500. So that is 3,600. That is supposed to increase your bank balance as by 3,600. A standing order, 70,000 was not recorded in the cash book. A standing order is supposed to reduce money. It's supposed to reduce money. So standing order of 17,000 supposed to reduce your money. A supplier paid 8,500 to the bank, and this amount was not recorded in the cash book. That is direct deposit. Direct deposit. You see this money that did not pass through the cash book, but it is in your bank. So direct deposit. The following amount in the bank were not recorded in the cash book. Bank charges. Bank charges supposed to reduce your amount. They were not recorded, so you credit that 5,600. Overdraft interests. Overdraft interests. You see, when you take an overdraft, suppose that is a loan. So an interest on loan is supposed to deduct your money. So you come here and balance this account. You come here and balance. What do you get here? 96,800 plus 3,600 plus 8,500. That is 108,900. Then there is balance carried down minus 17,000 minus 35,600 minus 22,300. So balance carried down here is 34,000. So this is the correct position of them. Now, another way you can present this cash book, you can represent it like this. XYZ consultant, adjusted cash book, adjusted cash book for the month of December 2022. You come here and say balance as per the cash book, balance as per cash book. It is 96,800. Then there is an error in entry, 3,600. There is less standing order of 17,000. There is direct deposit. This one you put negative. Direct deposit, 8,500. There is bank charges, that is 5,600. And then we have overdraft interest, or interest on overdraft. That is 22,300. So, and this will give you a balance as per bank statement, that 4,000. Now that is it. That's how we prepare adjusted cash book. The next thing we need to do here is to prepare the bank reconciliation statement. XYZ consultant, we want to prepare bank reconciliation statement. Bank reconciliation statement for the month of December 2002. The month of December 2002. This one is, can avoid this. Now here you begin with balance as per the bank statement. Balance as per bank statement. This was 107,000. This is information provided here, 107,000. Now we look for items that affect the bank statement. The first item is unpresented checks. Less unpresented checks. What are unpresented checks? Unpresented checks, these are checks which have been issued for payment, but they have not been presented to bank. So therefore, this money has not been deducted from bank. We need to subtract the unpresented checks from the bank statement. You subtract this. Then we have, you add uncredited checks. Uncredited checks. Uncredited checks, these are checks that have been given to bank for payment, but they have not effected the credit. They have not for payment. They have been given to bank for deposits, but the bank have not credited into the account. So therefore, we add them. They are supposed to be in the bank statement. So we have the balance as per cash book. Balance as per cash book. We add this 107,000 minus 74,200 plus 258,000, and that's how we prepare the bank statement, bank reconciliation statement. And that marks the end of this video. We'll meet in our next video. Goodbye.